All right, what's going on, everybody? Another week. Sorry, we're getting started a little bit late. We had a bunch of discussions going on just about everything that's going on out there. And I'm sure all of you know, I mean, it's tariff land. It's, are we going to war with Iran? Are we not? It's just, just so much news. And that's exactly what this show's all about. WTF is all about ranting, raving, and arguing about what's in the news. But we've switched the show up a little bit. Now we don't just rant and rave about the news. We go into lots of white papers, and boy, oh boy, do I have a whole bunch of them to share. But I'm going to get to everything. Stephen and I are going to get to everything right after this. All right, we are back at it. Welcome, everybody. Welcome to another episode of WTF. What the F happened? And you got Mr. Snaggy coming in from down in Florida, and then I'm coming in from snowy Buffalo, New York. And yes, we woke up to snow yet again. But nonetheless, got out for my run. It was a cold one. Whew, it was cold. So one thing I want to open up and talk about is the other day, and I just saw Dex on here. I had heard that California had an earthquake, a 5.2 tremor, I guess it was. Did you hear about that, Stephen?
Yeah, I was actually on I was actually during Money Club Monday, and I saw people commenting about it over there. So I actually did text Dexter and made sure he was all right. He was out enjoying the beautiful morning. Said he was outside, so he felt the rumbling, and pretty wild. Living in Florida, we don't have earthquakes, and I've done a lot of traveling in my life, and I've never actually felt one. So I guess I consider myself lucky, although I kind of wouldn't mind it. But yeah, I think I'll leave the earthquakes to the Californians out there.
Yeah, exactly. Well, some of the main things I want to get into, and I think we'll just go back and forth. There's a ton of stuff that's been in the news, plenty more than we're going to be able to unpack today. And folks, as you're doing this, we're streaming here on YouTube, on Facebook, and also Instagram. So if any of you have questions or comments or things that, you're seeing that maybe we should definitely bring up, so please put those in the comments. We will try to grab those and talk about them. But yeah, same thing here, Stephen. We have no earthquakes, but I do know of other earthquakes going on right now, and those are the earthquakes in the stock market. So I haven't checked yet today. Actually, let me look real quick. Where are we opening? All right. So we're right now looking at the Dow future at down 156. S&P is down, let's see, down about almost 1% at 50 points. And the NASDAQ down approaching a 2% pullback. Now, largely that is because of NVIDIA, the all-star tech company that makes the chips. but there's a bigger story here. I've covered this a bunch, done a bunch of YouTube videos on this, but I want to hit it right now because I got a white paper that came in from one of the economists we follow. And essentially what they were talking about is, and I'll just read this to you because I think it's a good read. He said, for the past few years, the world has been infected with a common strain of tech stock fever. I mean, all of us have seen that. I have literally met with countless people that literally you would think they're professional stock traders because they own NVIDIA and Apple, and they're like, I'm crushing it. I'm making 60%. That's the fever we're talking about. Symptoms include, for this fever, these are the symptoms. They include buying stocks at 50x revenue, chasing a handful of big names to ridiculous prices, and believing the bull market will last forever. Sounds familiar, doesn't it, Stephen? The bull market will not last forever, but let's just talk about some other times in history where this has happened, because this isn't the first time we've had this little scenario. We've had this same thing play out, but let's just talk about the tech little fever that we've got going on. So same thing happened back in the railway mania in England in 1840s, going way back. Happened again in the US in 1860 to 1870s. Electricity and the telephone boom. Yep, that happened in the U.S. in 1880 to 1900. Same similar thing. Everybody piled all their money into those stocks. And then many of you should remember this. I remember I started in Wall Street right after this, but it was the internet boom, the tech boom back in the 2000s. And that started in 1990 and went to 2000. And then poof, the bubble popped, and holy shit, was that a bad one. But it says technology innovations change, but human behavior never does. It starts out with a real tech breakthrough. AI would be the one here, and evolves into a raging, all out of control mania. Only the strongest companies will survive, is what he's saying. So here's what I want to talk about, and we've talked about this before. The current bubble in the tech space involves the Magnificent Seven. If you haven't heard about this, it is, I'll just list the companies. It is NVIDIA, okay, Apple, Meta, Tesla, and Microsoft. Okay, those are, I'm sorry, I missed Amazon. Those particular stocks, just those 7 stocks, this should wake you up a little bit this morning. These stocks make up 62% of the US GDP. Not only do they make up 62% of the US GDP, or they did, you know, when this was posted, which is a few days ago, these same Magnificent Seven stocks make up roughly about 60% of the gains, maybe a little less, give or take 5% here, of the S&P 500 returns. Has anyone been following these? Stephen, you've been following these companies, right? How's Tesla doing? I mean, I know there's a bunch of raving lunatics out there burning Teslas, and you know, I've watched some really cool videos of some professional skateboarders, you know, doing some tail slides on the Tesla Cybertruck. Pretty awesome. But I mean, you've seen some of that stuff about Tesla, right? How's that stock doing right now?
Tesla's down. I mean, you know, they're hanging in there over compared to everything else over, you know, since the tariffs kicked in and whatnot. But you know, if you pull back to about a year, I mean, I'll just kind of show you the chart real quick as I'm looking at it. Probably the easiest way to do this. So if we look at, you know, going out a year, you know, Tesla's had a good run up, but they're coming back to reality a little bit. But, you know, if we look back over the last month or so with some of the turmoil, I mean, Tesla's always been a little tumultuous. I mean, it's always, Elon seems to always be pretty controversial. And
leave that up.
Does, right?
Go right up the line. Meta's down 2%. NVIDIA's down 5%. We're going to talk NVIDIA in a second. You know, so the NASDAQ's down almost 2%. So there you go.
Yeah, I mean, yeah, NVIDIA is a wild one. I mean, NVIDIA, what gets me kind of, you know, I don't know what the word is for it, almost aggravated, is how, like, when things are doing good, you hear about it. Yeah, NVIDIA is awesome. It's great. Like, and whatnot. But then, you know, they have a correction. They have a pullback. The stock's coming down some. And it's like the world is ending. It's not NVIDIA. It's everything. It's the stock market. It just seems like everything. It's like whenever you hear things good, it's like, okay, yeah, that's nice. And then when things are kind of turning the other way, it's like devastation and it's all over. And you see the timing. I mean, if you look at this, I mean, if you look at NVIDIA over the last 5 years, they're cruising along. They have this ridiculous growth. I mean, from $27 a share 2 years ago to $150 a share, you know, a couple months ago. And now they're pulling back to about 114. But it's like, dude, they were at $27 a share just 2 years ago. Like, this little pullback's like not the end of the world, in my opinion. But
it's not. But I want to just go into some charting stuff, and this is going to be super rudimentary. But can you just pull back over here to where we're at today? Just hold the cursor over, you know, where we're at, about 106. Do the 5-year, or a 10-year. Actually, give me a 10-year. There you go, and just hold it. Do a 5-year. It's going to be a little bit easier to see. Yeah, this is fine. Hold the cursor over right at like where the far right of the screen. There you go. So if we were to draw a line from there and we were to go straight over, you can see we've got a couple points, and scroll to your left, Stephen. There. Oh, too fast. Scroll to your left. So here would be like one of the things you could say would be a touch. Go all the way over to that other big dip. Here's another touch. Keep going all the way over. See the big dips, the W. There you go. See the W right there. That's pretty much, you know, that was 102. So, but you could see where all I'm trying to say is if it's at 105 today, it's touched that same point several times here, and it fought resistance. Okay, so it had to decide, was it going to go down lower or bounce higher? So you can see in the W, it bounced higher. So see the W when it hit right around this price. Now hold it right at the bottom, Stephen. I think it was like 102 was a key number. Go to the other W, the other leg. There we go. 104. So between 102 and 104 provides kind of a floor, a weak one, but it's a floor. So all you need to know is if NVIDIA gets to around that price, which it probably will today because of the news I'm going to tell you in a second, it's got to make a decision. Is it going to run higher? Is it going to bounce and run higher and test highs again? Not saying it couldn't. Or is it going to run lower? And if it runs lower, this is where we start getting really interesting data. So go back over to where we're at today. Now, I want you to just kind of go down right where you're at. And I just want you to try to find how far would this fall? Maybe it would stop. See that other, like, kind of the V right there before the cliff? What was that? It could stop about there, but I don't really see it stopping there. The realistic stopping point, go down to the next level, is here. That's a super strong floor, but that's a floor at like 40 some dollars. So what I'm trying to tell all of you is it is very probable, if we've seen a tech sell-off, if we've seen a market correction, a severe one, it is very probable that NVIDIA, based on charting and technical analysis, that's a level you could see NVIDIA go to. How many people do you think would hold on to NVIDIA if it went from 106 where it's at today down to 40 some dollars? Now, I'm not saying that's going to happen, but it is probable that that will be the final resting place if we see a sell-off and if we go into a recession. That is very probable. And that actually happened during the dot-com crash, because that would be roughly about a little more than about a 60% pullback. That isn't just NVIDIA. That is just about every one of the Magnificent Sevens. So, some of the Magnificent Sevens have pulled back about 30%, and there's a lot more room to go. I'm just trying to point this out, folks. I'm just trying to help you all understand that this is the reality. It doesn't matter what stock. You could look at Amazon. Amazon's probably got a little bit more support. And if you go all the way over to the left, 21, 22, Stephen, you can see Amazon very well might be at its level, okay? Because you're probably, let's see, one, I don't know. Yeah, just hold it right there. 170. Where are we at today? We're at 176. So that's a super strong floor. And I would bet that Amazon could hold around there. It could go lower, but that's probably the strongest floor or resistance that you're going to get. All right, so let's see Meta. And I'm not trying to bore all of you with this technical analysis, but I'm just trying to paint the picture of like where this potentially could go. Because
hey, Chris, can you expand on it? So Sean was asking in the chat, can you explain it's got to make a decision, intrigued by how you call it and that it is going to make a decision. So
the stock, the company, or actually, I'm sorry, essentially the stock in the buyers in the market. So like the sentiment, let's call it that way. So all the investors, will determine, are they going to pull or are they going to go? And really it comes down to the institutions, and the institutions largely control the direction of a stock, not the retail investors. So when I say I'm kind of referring to the stock has to make a decision. Is it going to go lower or is it going to go higher? We call that, is it going to bounce? Kind of just like take a ball and bounce it on the floor. If you harder you push it down and the more times you hit it on the ground, the more momentum it has to bounce up. And sometimes if you were bouncing a ball on a thin piece of glass, if you bounced it hard enough, eventually it would break the glass and go down to whatever's below the glass. So that's the easiest way to look at it, is when a stock is testing something and deciding whether it's going to go lower or higher, it's based on how strong of a floor it is, how thick the glass is, and how many times it hits that glass. So when you look at these stocks, go back to NVIDIA. That's the easy one because we already kind of dissected that one. Sorry, folks, I'm still sick. I cannot kick the sickness. So when I was talking there, like you can see, like when you're looking at this high range where we're at, like, the W, I mean, you've really only got 2, maybe 3 touch points. It's not a strong floor, where, remember Amazon, when I was showing you the floor was all that a floor or a ceiling would be created by history and how many times a stock has been at that level and had to make that decision to go higher or lower. Typically, it won't just hit a level and then bounce and go straight down. It'll hit a level, bounce, and then kind of go to the next level, bounce back up, test it again, come back down. And that's why the rule of thumb is 3 bounces, or 3 touch points. So and I can't draw a line because this is Steve's chart, but if I just drew a line straight across, we'd be looking for at what point did the stock hit a specific level, price level, 3 times. And that creates a floor or a ceiling. Okay. So the real strong point here was like Stephen was showing, go a little higher than that, a little higher. Oh, you're an Apple. That's why it's screwed. So Apple, you can see that's a really good level right there that Stephen's at, like the 170 range. Because you can kind of, if I drew a line, see how many times that little chart, that bouncy line would hit. If you were at 170, it hit a bunch of times. That creates a really strong floor. Think of it as that's a really thick piece of glass that you'd have to bounce a ball on it really hard with a lot of momentum to break through that. But NVIDIA doesn't have that super strong floor. NVIDIA definitely has a lot of room to go down and very little probability of it going higher.
And you
Apple,
also notice the floor typically correlates with the previous highs. So if you look at the peaks,
always,
so these peaks
absolutely.
are basically catching up with what these floors become.
So when
So then,
people say you really can't predict where a stock's going to go, I don't believe in that. You absolutely can look at the past and chart, and you can look at other technical indicators or fundamental indicators, and you can definitely see where a stock will go. It's not difficult. I mean, they do this every single day. This is what hedge funds do. That's how they trade options on these. It's very probable to guess where a stock's going to go in a range of time based on where it's been in the past. So that's all I'm doing. I didn't want this to be a technical stock analysis session, but I was really just trying to paint the picture of what I'm trying to explain is, we are literally seeing something very similar to what we saw in the dot-com boom and dot-com bust. You're seeing several or seven in this case, highly speculative, highly, what would be the word? Speculative, but overvalued would be the best word, stocks that are all having some issues. Now, why NVIDIA? I picked on NVIDIA because you probably all didn't look at the news, but I'll just give it to you. Yesterday, NVIDIA said it was going to record a $5.5 billion charge off. And it's all related to this whole tariff thing. So the 5.5 billion is tied to exporting H20 graphic chips. Okay. And Stephen, I don't know if you want to here, I'll just share my screen. I'll show you this whole thing. I read this yesterday, so this is kind of pretty top of mind for me.
and while you're pulling that up, I mean, that's the other part of stock analysis, right? Is not only the technicals, but also the market, what's going on in the world. And that's why it's important to kind of follow the news somewhat if you're in stocks. I mean, if China, if those, and correct me, Chris, if I'm wrong here, but if the tariffs in China, remain at 145% or increase from there, I would imagine that would affect like an Amazon's business. I mean, China, a lot of Chinese goods, running through Amazon. So does something like that potentially affect the stock value as well? I would think so,
Yeah, I would think so. Sure. I would certainly think. Shit. Hang on one second. Cat is knocking over stuff. Bad kitty.
Bad cash.
Bad kitty.
See, sometimes your cash is the best, and sometimes your cash needs a little discipline.
Yes, exactly. So we gotta get control of our cash, but not to be confused with Mr. Lazy Cash. Can't really control him too well. Anyway, back to this. So when you're looking at this, you're looking at like they're taking a quarterly charge off, and I don't know why CNBC said a quarterly charge. Like the public doesn't know what that means, but a charge off or a write off, I think is essentially what they're saying. A 5.5. That's a big write off. So the stock went down 5%, okay, in extended trading when this was posted. And the U.S. government, so this is kind of the whole reason. The U.S. government during the Biden administration restricted artificial intelligence chip exports in 2022 and then updated the rules, okay, the following year to prevent the sale of more advanced AI processors. So essentially, right here, it's saying that the quarterly charge off of 5.5 is tied to exporting H20 graphic processors or processing units to China and other destinations, because China is essentially kind of forbidden, like us sending any of our stuff over there. They don't want it. And this is all part of this trade war. There's a lot more to it, but you can all read that on your own. But essentially, that's the reason for the stock sell-off. Now, is that super vital for NVIDIA? Does that mean NVIDIA is going to go out of business? No, a $5.5 billion write-off for NVIDIA is really kind of like you losing 50 grand. I don't know. I'm putting it into perspective, probably similar. So maybe it's like 500 grand. I don't know. It's a big write-off, but it spooked the markets when the markets are already spooked. The VIX has been, very high. There's a lot of fear in the market, a lot of people pulling out of the market. I've been telling people to get out of the market way before this, but it's just sometimes you got to get punched in the face a couple of times before you decide to learn that, you should duck when the punch is being thrown. If you just compare people's sentiment in the markets and how they invest to, somebody getting punched in the face a bunch of times, but they just stand there and the guy just keeps punching them. And every punch hurts. And then you start bleeding and you're like, wait a second, maybe I should duck. And then you duck and you're like, oh, he didn't hit me that time. And then you duck again, you bob, you weave, you get your knees into it. And then all of a sudden you're not getting hit. And now you're Muhammad Ali. But that's investors. Like too many of them need to get punched in the face way too many times. And what punching in the face means is you lose a bunch of money before you wake up and smell the roses and realize, oh my God, maybe I should get out of this. But they get out too low. It's the same thing I've said a million times. You should buy low, sell high, not buy high and then sell low. But the average person buys high and sells low because of this fear and the punching in the face. But that's kind of where we're at. And you know, that's definitely where we're headed. There's no question about it. And I want to show one other thing too. And then Stephen, we'll go to some other news, but I just want to finish this whole thing that I'm talking about here. So this is more about tariffs. And the tariffs, folks, I think by now, you know, it's more of a negotiation than anything else. I mean, I think Trump and the Trump administration is really hoping, and it's working, and I have that here. It's certainly working, but they're really hoping that these countries kind of bend to the will of the U.S., which is maybe a bit dictatorship-ish, or what are some people calling it? I know the left is calling it, what is that word they're using, Stephen? Have you seen what AOC is doing? Tyrant. I think they're calling him a tyrant, if I'm not mistaken. But anyway, it's a negotiation and it's working because 15, and I'll get into it in a second with the trading partners, but this one right here, I think is an important one to look at because this is really just talking about one of the telltale signs in technical trading is the 200-day moving average. So when the S&P goes below the 200-day, it nothing good happens. And you can see where we're at. We're way below the 200-day moving average, which is what this is showing. Now, back here in April, it basically is where it kind of went below, but it came back. And see, kind of remember what I was talking about, the ceilings and the floors? This is where it tested the ceiling. It was like, oh, can we get above the 200-day moving average and come back to the area we like, which would be kind of, if anyone's looking at my thing, this whole area is where the market would be thriving and where there'd be a really strong chance of a bull market continuing. This down here is like, oh shit land. And we are definitely in oh shit land right now. So it's basically just saying, and I think a lot of this, it's, you know, it's not about the tariffs. It's just about, this is just where we're at in the market cycle. And this is what Ray Dalio talked about and all these other things. There's some other real big problems that oh crap. Stephen, can you take over? I just got to authorize something here real quick.
Yeah, you know what I'm going to do? I'm going to play a 2-minute video because, you know, somebody was said in the comments over here, and I think it's a smart comment from Navigate Your Ventures, witnessing the art of the deal at work. And what a lot of people, I think, forget is that Trump, first and foremost, President Trump is a businessman and an investor and one of the best of our lifetime. Regardless, I realize he's very controversial, especially now because of politics. Everybody loved him. You know, he was the, you know, cover of rap songs and he was at every party and all the politicians loved him. And I think he was even at Hillary Clinton's wedding or, you know, all these different things. And then, you know, obviously he became a Republican politician and is now one of the most hated men on earth. But you know, it's hard to argue with somebody like that kind of leading the country right now and trying to make things better. I mean, we sometimes forget we're over $36 trillion in debt. You know, the global economy is a mean world out there. And so it's things like that sometimes it's like, well, maybe let's give this guy a chance. Like it's been a couple weeks with these tariffs. I was just reading on Yahoo Finance that it looks like China is saying they're ready to come to the negotiating table. I mean, I think we got China by the you-know-whats. And so I want to share this because this was from Barbara Corcoran, who is Shark Tank, you know, one of the stars of the show Shark Tank and a very, very successful businesswoman and investor. And this was her talking about Donald Trump. And it's a 2-minute video. I'll play it for everybody because I think it's kind of interesting to hear it from her perspective. Somebody that knows him very well and is in the same world of real estate investing and development. So I'll play this from Barbara Cochran for everyone real fast.
You knew Donald Trump way back in his New York real estate days.
What a charmer.
And, you know, despite, you know, whatever you say about him, even you say he's a great salesman. What is his sales technique? Why is he so great?
He is a phenomenal salesman. He's not a great salesman. He's probably the best salesman I've ever been in the company of. And I spent a lot of time with Donald because he's 5 years older than me, I think 4 years, and he was raising his company right parallel with me raising mine. And so I did a lot of work with Donald, and I can tell you he is the best salesman I've ever met in my life. I watched him walk into a situation, for example, selling the Plaza Hotel to the Chinese out of Hong Kong, it was in Taiwan, group of Asians, wealthiest families in Hong Kong. And they were there because they were interested in the Plaza Hotel. And I was the broker, or my brokers, we were all at the table. We were like really hungry to make this deal. And I watched him totally not pitch the Plaza Hotel, bury it, and talk about the land masses on the Hudson River and the buildings that would be there. They were not the least bit interested. They just wanted to buy the Plaza Hotel. Like a customer, I want to buy it. And Donald was near bankruptcy, really needed the money to bail out. And I watched him. I thought he was so off. He wasn't. They bought the land and built all those towers on the West River as we know it today. You know, all those Trump towers along the river. That was the deal. How did he do that? I'll tell you what his masterful mind does. He is a genius at picking out the vulnerability of someone's personality. He can smell it, sense it, and trust it. Okay. So, for example, if you were to walk into a business meeting with Donald and you're saying whatever you're saying, I've seen it time and time again, he could see what your weakness is and not physically reach over and put his finger on it, but he just could see what your weakness is and play into it. Not the nicest thing in the world, but it's a certain gift I've never seen anyone else.
So I just thought that was interesting. I mean, that's, got to remember who is actually in charge here. And, Michael made a comment over here, free trade makes sense. Uneven trade makes zero sense. And 100% agree. And that's what Trump is saying right now is, hey, we're completely uneven trade here right now. Like we're getting taken advantage of. We're funding the entire world and it's unfair to America. And so he's doing all these moves to bring people to the negotiating table, to make new deals, to create, presumably, Michael, at least I would hope, new free trade agreements and make it a truly global economy. So we'll see where that goes. But I thought that was interesting. When I first started following Trump, I'd known about him. I was younger. But when he wrote this book, Why We Want You to Be Rich, with Robert Kiyosaki. So Robert Kiyosaki, as a lot of you guys know, I talk about him a lot. He was a big influence on myself when I was learning about entrepreneurship and investing back in my mid-20s. And when this book came out, I was like, wow, like it's pretty cool. And, you can see here, Chris, I mean, Robert Kiyosaki, obviously everything Kiyosaki does is written by, where'd I go? There we go. Is written really by Sharon Lechter. So of course we were just hanging out with Sharon last month down in Tampa, but pretty cool right there. So anyways, welcome back.
Thanks. Sorry. I had to tell Chase Bank that the wire that we were sending was going to the taxes, and I had to go through a whole series of freaking questions. It's amazing how much control banks have of the money that we put in there. Oh, it's just for your protection. You mean paying my taxes is for my protection? Anyway.
The other thing real fast on that video I wanted to mention, Chris, was she said, Donald Trump is, 4 years older than I am. I mean, I watch Barbara on Shark Tank still to this day. I mean, she's sharp as a tack. I mean, Trump is pushing 82 years old. I mean, the guy's sharp as a tack. It's pretty amazing to see some of these people that are a little bit older, have a lot of experience that are still like on the ball like that. It gives me a lot of hope for the future, at least.
Yeah. I saw a meme where it showed like an NFL, like running back or an NFL player that was like just jacked. And then next to Trump, and they were exact same height, exact same weight. And, they're just, and so this is Trump, and this is a professional athlete. And I was kind of thinking of it. I'm like, this is a dumb, because it was a negative post about Trump, but I'm just like, you guys are idiots. Yeah. Like muscle weighs more than fat. Okay. So it's very probable that somebody could be the same height, the same weight, and look completely different. One could be a little overweight or fat, and the other could be extremely muscular. It was just, but that's the sentiment. It's just like anything they can do. And then I don't know. Anyway, it's just silly. I do think, the same thing I've said about Trump all the time, and this will be a negative riff on Trump, is he just doesn't know when to keep his mouth shut. Like he doesn't really, first off, like I'm a New Yorker. So sometimes I don't know when to keep my mouth shut, and I don't know when to not, just be an asshole. And I think kind of the same thing for him. But when you're the president, you got to kind of rein that in a little bit. And, I've listened to just some of the things that he said, some of the interviews, and it is, to the the wimps out there in the world, the people that just can't handle the truth. Like, it does seem like he's a bit of a bully, a bit of a tyrant, if you will. And I think that's just his nature. It's always how he's been. I mean, it's not like going into this, we didn't know that he was like that. It's kind of like that's the only side of him. But I just kind of someday or sometimes wish he would just bring it to be a little bit more, presidential would be the word. If you compare Trump to Obama was probably the most presidential president we've ever seen. Not saying good or bad or anything about that. It's just the way he talked, the way he handled his mannerisms, in situations was very presidential. And Trump is sort of just kind of like a bully. But it's working. But it's working because it's the United States of America. And one of the big concerns Ray Dalio is calling out right now is the deficit, in the U.S. debt. And it is a bit wild, a bit crazy. And that is something I definitely am concerned on. I've seen, the yields on long-term or 10-year, we'll talk specifically about 10-year treasuries. I've seen the yields spike, which that happened, I understand the markets very well, and I don't want to bore anybody, but when the stock market goes down, okay, like it did, that big pullback, there's usually what's called a flight to safety. It's rudimentary and just happens every single time. And we didn't see that. So this last pullback, we didn't see that flight to safety, which is typically money comes out of risky assets. We'll just pick on NVIDIA in stocks and moves into safe assets. Treasuries are the safest investment you can put your money into because they're backed by the full faith and credit of the U.S. government. But now what they're saying is because of the tariffs, because of the debt, and this is what Ray Dalio is also saying, that people are losing faith in the full faith and credit of the U.S. government. So therefore, when they were moving money out of the risky assets, the money was not flowing to the treasuries like it normally would, which basically shows an internal crack in the foundation of the United States of America. And there's other countries or institutions that don't see it as a fit, safe place to hold their money. It's too early to tell, but that's definitely why yields went up. Now, yields, which is the interest you get paid on a treasury, when they go up, there's two reasons. Number one, it could be a reaction to interest rates, which is what I talk about all the time and have plenty of YouTube videos explaining the inverse relationships of interest rates to the price of treasury bonds. But the other thing that it is, and this should make a lot of sense, is kind of like, think PMC. If there's a second position deal on PMC and maybe it's a bit riskier, you would expect that borrower has to pay a higher interest rate to attract our money, to attract a lender's money, because it's a riskier deal. So the same thing with treasuries or any investment. They have to pay a higher interest rate, higher yield to attract investors to invest money into it because it's viewed as slightly higher risk than it was in the past. That isn't a good thing. I'll be honest with you. But it is also one of those things where it's got a little bit of a knee-jerk reaction because it's been in the news, and I don't really listen to the news or pay attention to the news. I really try to look at the fundamentals. And when I look at the fundamentals of it, and I really kind of boil it all down is in saying, okay, if I was another country and I was trying to move money into safe assets, what's safer than the U.S. right now? Would it be buying bonds from China or EU or any other country in the world? Hell no. So again, I've said this a million times. I'll say it again. The United States of America is still the nicest house in a really shitty neighborhood. Like, it is. The world economy and in all the other countries, like, they're not what the U.S. is. The U.S. is still the strongest economy. We're still the world power. We still have the U.S. dollar, which is still what oil is largely traded in. And some of you could argue and say all the bricks and all that. Yeah, I know. But it's still to today the safest place. So when you see this pullback and you see this, sentiment out there that the U.S. is in trouble and the deficit and, the interest payment on the debts and all these things, not disagreeing with any of that, but still then I would beg the question of, okay, what's safer, right? Because that's a logical question. All right. I agree with everything you're saying, Ray Dalio and everybody else and all the leftists that would say the U.S. is going to, be gone. What's better than the U.S.? If you were somebody that had $1 billion and you needed it parked in the safest place, and you all of a sudden kind of had a little iffy feeling about the treasuries, where is safer to put your money? I mean, if anyone can answer that question and tell me something that makes sense, I'm all game. You can't answer that because there is nowhere safer. At this time, there's nowhere else you could put your safe money that is safer than the U.S. There's not. They've never defaulted.
I mean, gold's up 48% on the year.
But that is so I'm glad you went there because I was literally going to show an article, but we'll just go right off of this. This is a direct or correlation or relation to what I just said.
Yep.
People are piling money into precious metals. And Jim Rickards is one of the economists I follow, and I read a lot of his stuff. He's a gold bug, always loved gold. But he is even saying that gold is very high right now. And do you want to buy low and sell high, or do you want to just buy high? Now, listen, I'm not saying gold's a bad investment, but gold is up 31%. What is that for the year?
Yeah. 48% over the last year.
48% for the last year. I'm sorry. Look at that chart. You're buying at the all-time high, and it's not just a high, it's a spiked, overinflated. Look at that. That shit looks just like NVIDIA did, maybe worse. This is what's happening. People are looking for a place to park safe money. It's flowing to gold and silver. What's silver at? What's spot on silver right now?
33.
All right. So silver is a way better investment than gold right now, in my opinion, but silver is still up for the year 31%. So
31,
again, still pretty high, but not quite as spiked as gold. So it's really one of those periods of time where you kind of just got to sit back and just calm your ass down and just sit on the sidelines. Let some of this craziness pass, but don't stay in the market. Don't keep your money invested in risky assets, because clearly you can see the sign of where that's going. It's a time where you really want to just kind of I don't know, smoke a joint, sit back, like just relax your ass. Like there's no rush to invest right now. And I don't smoke weed, but I'm just saying, like, that relaxes people. And hear people say all the time, oh, you should. I get people all the time because I'm all stressed out and anxiety. They're like, oh, you should smoke a joint. I'm like, no, I don't want to smoke a joint. But anyway, it does work.
It reminds me of Bill Maher. I used to always love Bill Maher, and he's become he's Bill Maher. I mean, but you got to give the guy credit. Did you see where he went with Kid Rock to the White House and had dinner with Trump last week?
Oh, that's pretty cool, though.
Did you see that? Yeah, I mean, Bill Maher, you got to watch it. It's I'd play it, but it's an 11-minute long segment that Bill did on his show this week. It was really good, though. He basically says, listen, I went in thinking that Donald Trump is the biggest asshole in the world. Actually, Bill Maher printed out a list of like 60 or 70 insults that Trump has called him over the years, like fucking loser and idiot and wacko and all this stuff. You know what I mean? So Bill Maher brought him a list of all those insults that Trump's called him. And he was like, would you mind signing this for me? And Trump was like, yeah, absolutely. And took out his pen and signed it for him, was laughing. And he goes, after having dinner with him and hanging out with him, he goes, Donald Trump is one of the most sincere, honest, straightforward, let alone politicians, just people I've ever met and had dinner with in my life. And that's coming from Bill Maher, who's one of the, biggest Democrats in the country, publicly speaking. And so it was interesting to see that. So check that out. But it just goes to show you how Trump is portrayed on television and in the public versus how people that actually know him and spend time with him say that he is,
He's definitely playing a game of chess. I was just reading through some of the comments here. Chris Ash had a good one. Trump just wants fair, balanced trade, not free trade. And listen, I know this is controversial, but like, we have to get there. Like, you can read it all over the place. This isn't just the news or the right side. Like, China has literally been a bully to the entire world because they've had the cheapest labor. They've been able to produce all the products. And you know what? The United States of America has completely, excuse my language, but fucked up. We produce nothing anymore. We've gotten so big and so wealthy that literally, just like Ray Dalio talks about in his videos, we've gotten freaking lazy. And because we've gotten lazy, the book, Hard Times Create Strong Men, like that's what we're going into. But because we've gotten lazy and because we really produce nothing, we've become a service economy. Like, we got to bring producing back. And there's no easy way to do it. No easy way. So all the lefters out there that like just want to sit there and like just point fingers and blame it, like they just don't understand. There isn't an easy path. There's no easy way to bring it back. And if we don't, it literally, the United States of America will cease to be the world power. Absolutely. If we continue down the way we were headed, although it's nice and cozy for everybody, it's just, the music is nice and soft, but we were literally destroying the country from the inside out. What he's doing now is very painful. It's going to be painful. The tariffs are going to be painful. Like, there's a lot of things that are going to happen that none of us, me included, are not going to like. But there is just no way to get the United States to the place it needs to be, except for this. In taking a bully, China, if you will, and forcing their hand with a 145% tariff threat, which, just so you all know, just about everything we use is produced in China. I read an article, the cell phone. Okay. I don't know what these things cost. This one's old, but like they're pretty expensive. But do you know how much this would cost if it was made in the US right now today? Stephen, you know? There was a whole article on it. $3,500 is what your iPhone would cost if today it was made in the US. But you know what? Trump is not sitting there saying, hey, we need all cell phones, made in the US. That's never going to happen. And it's in, like Apple has come out and said, that they're not going to do that. But they can move to other countries where it's a little bit more favorable, maybe a 10% tariff, Vietnam and all these. Basically, what Trump's got to do is he's got to break the back of China. And that's a tough thing. It's a communist party. But the one good thing, I don't have it up here. China, here, I'll find it. China literally said they are willing to come to the table. All the news is on this the chip thing, but I saw it this morning. It was Top Line News, wherever it is. But anyway, China is, or here, I'll go to, I have so many freaking articles up here. Yahoo Finance, we'll get to that in a second. But China is saying we will come to the table for negotiations, but they want, they don't, essentially they don't want to talk to Trump because they don't want to be bullied. They don't want to be, they want peaceful talks. So there's got to appoint somebody that will talk to us. And I'm sure that will be done because that was Trump's plan in the beginning. Like, put so much pain on. Listen, but here's the one thing I know, and Ray Dalio, I'm sure, would back me on this. China cannot make it without the United States of America. So this trade war, this 125, 145% tariff, if we stopped buying stuff from China, like it'd be a disaster here in the U.S. It really would, because we don't have the capacity or the infrastructure to produce the things that China does right now. And it's a 5-year run to get us to that point where we can produce it. So just so you know, like we can't play this trade war because we will both lose severely. But the China will lose. They will lose the game. It will be very painful and very difficult on both countries, but China will, at the end of the day, lose the game. The U.S. will not, but it will be incredibly difficult for everybody here in the U.S. if we continue down with this. So they both know they've got to come to the table and negotiate. And they both know, like, the path through this is to find an amicable way to close this trade deficit and this bullying from China. But is it going to happen? I don't know. And then you got this Iran thing and everything else, which could lead to World War III. But you know what? We've been talking about that for a while, so I don't even want to go there. But I do want to talk one more thing, Stephen, and then I'm going to turn it back over to you. Sorry, I didn't think I had this much to talk about. So there's this article here, back to NVIDIA and that. But let me find my article here. This is pretty interesting. This is the comment comes 90-day pause on the steep Liberation Day tariffs. Come on, where is it? It was basically showing how many countries have come to the table with the U.S. I think there's 16. So there's 16 total countries, that we are major trading partners in the U.S. China's not coming to the table, but they've said today that they're willing to, and they're willing to kind of start talking. But the other 15 are in negotiations with us right now. So anybody that tells you that this game of chess, this game of Russian roulette, if you will, this game of negotiation isn't working, oh, damn well certain it is, because 15 of them are now negotiating with the U.S. to try to not be on the wrong side of this Trump bullying or this Trump tyranny, as the left likes to call it. But it's working. It's working. Biden certainly wouldn't have done this. Harris certainly wouldn't have done this. They would have just continued on with China and just said, oh, whatever you want, China, we need you, we love you. Mwah, mwah, mwah. Yeah, and they would have continued to just bully us. So that's where we're at, folks. Sorry, here we go. There are 15 large trading partners. We set aside China. I found it finally. There are 14. I was wrong. 15, and 14 of them are in rapid motion, setting up a process for the 14 largest trading partners to negotiate with that. China has raised its duties on imports for U.S. goods to 125 from 84. U.S. tariffs on Chinese imports have ballooned to 145. So again, could it go higher? Yep. It's just a game of Russian roulette. A tough game because China is not a tough player and they're not going to buckle like the EU or any of these other countries that acted all tough in the beginning. And they're like, oh my God, okay, what do you want? But China's not going to play that game. So I don't know.
The part that scares me about China is they hold, I believe, a lot of our debt. right? A lot of our
They
bonds
hold
and
a shit ton of our
treasuries.
debt.
If they decided just to eat the bullet and so to say, and just dump that on the open market cheap, and take the hit, take the financial hit, that would really hurt the U.S. Severely. And I think that's one thing that they have holding over us. And then, of course, Taiwan. What are they going to do with Taiwan? Are they going to go in and do a full scale invasion and try and take over the chips? I mean, we talk about manufacturing and all the little things that we buy, but without chips, that really would be the end of everyday life as we know it today. And so, those are the two things that worry me a little bit about China, that I think about.
Yeah, I'll just share this just so everybody can see. This is the article that I saw. It's on Yahoo Finance, and it was on CNBC earlier today, but for some reason it's gone now. It's funny how that works. But right here, Trump tariffs live update. China signals readiness for talks if the U.S. shows respect amid numbers game. So whatever that means to me, that means like we're not talking to Trump the bully, or whatever it is. So they want to appoint somebody. So China now faces up to 245% tariff on imports to the United States. So I hope you all understand, like that's bad. We buy so much shit. China produces so much stuff that we need and use every single day that, I mean, you're already seeing it. I mean, car lots, like you're seeing shortages in cars again, because obviously tariff. I don't know. I don't know how to take it. I don't like it, but you know what? I understand that the obstacle's the way. It's the only way. We're going to have to go through the pain to get to the right side of this thing. And there's going to be a lot of fighting, a lot of people that are, changing their viewpoints. I've had lots of people recently that, before were, Trump supporters and now they're not. I've had a bunch of the people that we know well that are, full left that are now like taking the shots. It's like those little gut punches. See, I told you Trump was going to fuck it up. Whatever. It's just everybody's just so quick to point fingers. And I don't know. That's how I am. That's how I'm looking at it. I mean, not changing my view. I just always think he's just that needs to be a little more presidential in some of these matters, but whatever. It's good. The cards are going to fall the way the cards are going to fall at this point.
Yeah, I'll say, Chris, one of the better people to kind of follow and listen to on China is Kevin O'Leary.
Yes.
Ironically, another Shark Tank guy, but he has, in my opinion, some really good takes and opinions on China and what's going on and the path forward for it.
Yeah. I love some of these comments, folks. You guys are putting some awesome comments up. Instagram's a little slow today. Instagram has 0 comments. You guys are definitely losing the comment game today up there on Instagram. I don't know. Everybody's sleeping a little bit down here, man. YouTube is just owning shit. Love it. Yeah, Michael's killing it over here. He said, but free trade makes sense. Uneven trade makes 0 sense. A lot of good comments. Dexter was saying something about AI, is AI driving some of this market volatility? And I think you mentioned this earlier, but yes, 100%. A lot of just trading in general, even from when I was, doing the financial advisory thing, the way we would trade is drastically different than the way just the average person trades today and the things you can set up. I mean, it's just so much faster. So the swings will get a lot more aggressive. If anyone thinks that like we've seen the worst of it, there's a whole bunch of people, and I want to get this out. There's a whole bunch of people that think like, and there's a bunch of people online saying, oh, this is a buying opportunity. The last pullback, like buy. This is a buying opportunity. And even people we know well are telling people to buy. That is the biggest freaking mistake you'll ever make. Unless you are a professional trader, like, listen, and if that is the case, then yes, it created a really good environment for people to make money, but it's been almost impossible to trade derivatives or options on the markets because they're so erratic. And when you're trading options or even doing any type of day trading, you really need a market to pick a trend. It's either a bear or a bull trend or a sideways trend. It's very difficult to trade the markets where they are. So best thing I'll tell everybody is I'm not trading it. Like I bought more treasury bonds yesterday. I can't believe how cheap treasury bonds are right now. I bought more of them. I believe in the United States of America. I believe that we're going to come out on the right side of this. I don't think that, everybody's going to dump their bonds. I do worry about China, but that news about China coming to the table wanting to negotiate is good news. Yeah, you're right, Chris. Trump is definitely not a polished speaker. He's a good speaker, but he says the same thing over and over. He really does. But I guess maybe that's part of his thing. What else you got, Stephen?
Yeah, I mean, just coming out this morning, retail sales increased 1.4% in March, greater than expected. They're expecting 1.2% at 1.4. So, people are still out there buying and spending money. And, is some of that fueled by the tariff talk where people are scared of prices going up? So they're trying to get some stuff in now. Different ways to kind of read this, but interesting data nonetheless. And, vehicles, the auto industry, with these tariffs is something else that's pretty interesting to follow, and start looking at how many, some of these American car companies and the majority of the parts and whatnot are not made in America. It really opens your eyes to how much we do depend on global trade.
I always tell people, the rougher it gets out there, the calmer it gets in here in the, the world we're in with the infinite banking and everything else. Cause it's just like every day you have more money than you did the day before. Doesn't matter what's going on in the economy. Doesn't matter what's going on in the markets. Yeah, thing just keeps ticking away. Although it's not a lot, you're still making money. And pretty soon, a lot of us are going to kind of have those conversations with coworkers, friends. Family's the best. Family's the best. Where they're, you kind of know, and when you meet up with them, like Easter's coming, this is going to be fun. When you're around the table and everybody's there, who has been like that bull, like, oh, I've been, they're always bragging, oh, I'm making so much money in my 401k. That IBC shit. Who wants that? You're going to see a change in their face, and you're going to be like, so how's that working out now? Because when people are down 10, 20, 30, 40%, your little 5% you're making in the policy seems really freaking good. And you're going to start to see that. And then PMC's on fire right now. I mean, there's a lot of good stuff going on in Private Money Club. And pretty soon, we'll be announcing some real big news about PMC Wealth. I think all of you are going to love that. I keep talking about sitting on the sidelines. Well, we're going to be able to manage that sideline cash for you to get the best return on a monthly basis. Like I don't think anybody on here could legitimately look me in the eye and say, hey, we got this company that manages our bank accounts to make sure we have the highest yield we can possibly get in the country. Well, that's what we're going to be doing. We're going to literally manage your bank accounts to make sure that every month, whatever the highest paying banks are out there in the country, we're going to tap into them banks, and we're going to be reallocating under this, behind the curtain to make sure that you're getting the best yield on your sideline money, your FDIC insured dollars, and then also treasury bonds and all that good stuff. So little glimpse into the future.
I love this right here. Navigator Ventures saw a Toyota Tundra ad that made a point to say assembled in the United States. I think we're going to start seeing more and more of that. And
I agree. They were really big on it back a while ago, but we haven't really heard that made in America thing. I think that's going to be a major push from the Japanese car manufacturers, made in America. And listen, that's probably your best example of tariffs and the impact. I mean, go back to the 80s when Japan was a major threat to the U.S. There's a lot going on. I know many of you don't remember that, but there was a lot going on. Like Japan was flooding the U.S. with Japanese products that were cheaper and way better than U.S. made goods. And then what'd we do? Slapped a bunch of tariffs on them. See, all these people like AOC seem to forget. They don't even know history. Maybe they should just go back to grade school and learn this stuff, And then what happened? Well, Japan said, oh, well, we need the U.S. We need to sell our vehicles there. So we'll just manufacture and make them in America. And now Japanese cars there's not anyone on here who can't look out. There's a Toyota, there's a Hyundai. You can't look out your window anywhere you're at and not see Japanese cars out your window in your parking lot. And they are all made in the United States of America. All the people that are putting those cars together have good paying union jobs that are getting them paid, providing health insurance, providing 401ks and matches and pensions and all this stuff. All because of tariffs. There we go.
Love it, man. Well, a couple things to kind of start wrapping up the show here today. I do have a confession to make, Chris. I turned to the dark side, and
you went to the left, didn't you? I knew it.
I'm trying to practice what we preach and buy more American and really focus on that kind of thing. I have a confession. I ordered this week the most American-made vehicle in the United States. Today, I ordered an electric Tesla. So it's being built or sent or whatever they do with them, and supposed to be picking it up in a couple weeks. So I went to the dark side, went electric for one of our vehicles. Trust me, I still have the 6.7 liter turbo diesel sitting in the driveway, a Ram 2500, and a couple other cars. But I'm going to test out the electric waters, Chris. So that's my confession,
technology, man.
That's my confession for the day.
Only advice I have is don't rely on the brakes on those Teslas. You know, they go really fast, but they don't stop really good. So be careful with that.
We'll see where that goes, but just having some fun over here down in Florida. Also, congratulations to Rory McIlroy for winning the Masters this weekend, completing his career grand slam of winning every major PGA Tour tournament. It was kind of cool to see. And you want to talk about focus. So he played his final round with Bryson DeChambeau, who's a pretty animated character. Bryson's a vocal golfer. He's known for shenanigans and having fun. And he said after the round that Rory did not say a single word to him the entire day. So Rory was focused, but it goes to show you when you focus on something and you want something bad enough. I mean, he's been wanting to win the Masters forever. And when you focus hard enough to see it actually happen was kind of cool. He almost broke at the end. He missed a 4-foot putt to send it into overtime. He could have won it, but he won in the extra playoff hole. So congratulations. Also, hockey and basketball playoffs starting here in the next week or so. So good luck if you have any favorite teams out there. And of course, Sunday is Easter. So happy Passover, happy Easter, happy. Hopefully you spend some time with family this weekend and enjoy the holiday. And Chris, do not talk politics at the dinner table. So with that being said, that's all I got, Chris. But
I just got two other things. SJC TLC or something like that on Instagram corrected me and said Hyundai's made in Korea. They are correct, but can somebody fact check that and see if Hyundai's are manufactured and made in America? I'd be willing to bet they probably are, but yes, they are Korean. So thanks for that correction. The other thing Brandon had just put up there, this is something that Trump actually said, and that's why I had it up there. Brandon put up, here's where we're at right now with other countries owning our debt. So Japan, who we're really good with, I mean, after what happened in World War II, we're in a good place with Japan. They have $1.1 trillion of U.S. debt. China has approximately $768.6 billion, which if you go back in time and you'll look, China has been divesting from U.S. debt for quite some time now. $768 billion is a lot of money, but I will tell you this. Let's just say, Stephen, that China decided that they wanted to dump all the, they can't just dump it, but they wanted to mature out of all of U.S. debt. The U.S. and the U.S. economy could absorb a $768.6 billion hit. I mean, listen, like how much money did they print during the pandemic? There you go. So $768.6 billion is a small potato for the United States of America. That is not going to affect the U.S. if China dumped all their bonds. It's just not. So, Brandon, thanks for putting that up. I just think it really helps put things into perspective because a lot of people you're going to start hearing that, oh, other countries, they lost faith in the U.S. They're dumping their bonds. It's not going to be as big of an issue because there's still no better place to park their money. And they're going to figure that out. Sure, yields are up, prices are down. Just means a big buying opportunity for you. There we go. Chris Ash coming in with it. Hyundai has at least one U.S. factory, but they will have more, I'm sure. With that being said, folks.
Hold on, Chris. Before we do the announcement, hold on. I got one more thing. So we do have a wealth webinar going on today at 1:00 p.m. Eastern. So join us for the wealth webinar. Just go to chrisnaugle.com, scroll down the screen, wealth webinar. You can register for free. But Craig on our team, who's known as Mr. Freak in the Sheets because he loves spreadsheets so much, Craig has put together an incredible presentation on why the phrase buy term and invest the difference is nonsense. So we're going to break that down today. We're going to get into why Chris was talking about earlier, how it's crazy out there. It's beautiful in here because no matter what happens out there, our money continues to grow and compound for us. We'll talk about that on Wealth Webinar today at 1 p.m. Eastern. So register for the free webinar. Myself, Craig, and Ms. Shauna Decker will be holding down the fort for Wealth Webinar. It's going to be a good one today. And then we did mention Private Money Club before. We do have a event coming up in person in Dallas, Texas, May 8th and 9th. called Money Tank. And we have, I believe, 3 VIP tickets remaining. So if you have not bought your ticket for Money Tank yet, you want to go VIP, make sure you buy that ticket today because we have 3 left. GA, we have about 10 to 12 seats remaining for general admission. So grab your ticket if you want to meet us and hang out with us in person for a few days in Dallas, Texas. It's going to be an awesome event. The lineup we have, a lot of new speakers. We have about 30 some people coming, just part of Private Money Club. So a lot of experts that'll be there, a lot of conversations, a lot of business, a lot of money to be made there. So it's going to be a lot of fun. So we'll see you guys in Dallas, Texas, May 8th and 9th. It's privatemoneyclub.com/money tank to get your tickets. All right, Chris, take it away.
All right. So yeah, Money Tank's going to be epic. Hopefully we'll see all of you there. Stay tuned. Get your tickets. I would be surprised if with 70 some people that are on here, the 3 VIP tickets aren't gone after this. Get on the phone, email Shauna, whatever you need to do to get them. But with that being said, folks, we'll see you this afternoon for Wealth Webinar, and the Freak in the Sheets is going to be at it again. We'll see you then. Thanks.